Good day, everyone. My name is Gary, and I will be your conference operator today. At this time, I would like to welcome you to the Ford Motor Company second quarter 2024 earnings conference call. All lines have been placed on mute to prevent any background noise. At this time, I would like to turn the call over to Lynn Antipas Tyson, Executive Director of Investor Relations.
Thank you, Gary. Welcome to Ford Motor Company's second quarter 2024 earnings call. With me today are Jim Farley, President and CEO, and John Lawler, Vice Chair and Chief Financial Officer. Also joining us for Q&A is Kathy O'Callaghan, CEO of Ford Credit. Our discussion also includes forward-looking statements about our expectations. Actual results may differ from those stated. The most significant factors that could cause actual results to differ are included on page 20.
Please note, this event is being recorded.
Hello, everyone, and welcome to Kilowatt, a podcast about electric vehicles, renewable energy, autonomous driving, and much, much more. My name is Bodie, and I am your host. And today we are going to cover Ford's Q2 2024 earnings call. It was actually a pretty interesting earnings call. Not typical from what we get from Ford. I thought we got a little bit more insight than we normally would about Ford's thoughts on new products, on software services, and their current EV lineup. So I think this is going to be a good episode. Well, I mean, we'll see, but I think it's going to be good. Let's go ahead and jump into Ford CEO's Jim Farley. Jim Farley, Ford CEO. I'm saying that wrong. Anyway, let's jump into Jim's opening remarks. And as always, these are edited to be specific to what we do and talk about on this podcast, which is all the EV fun stuff. So let's go ahead and listen in.
On electrification, we've been very vocal about why electric vehicles are so important and a great choice for customers and businesses. Customers' usage data and cost of ownership data would indicate about 50% of customers who buy automobiles would be better served on buying an electric vehicle. Now, there's lots of misconceptions around EVs on the separate areas of cost, like resale value and insurance, of course, range and charging and battery life. And OEMs like Ford must do a much better job in educating our customers about the advantages that an EV offers in terms of cost of ownership. As you know, we are the number 2 EV brand in the U.S. for over 2.5 years. That's a long time, and we've learned a lot, and now we have used those learnings to sharpen our strategy. What we learned is that it's incredibly important to be transparent about Model E losses inside the company as well. This forced accountability, and the result is our team is getting much more strappy and resourceful in terms of turning the business around. We are now more disciplined and have to be for capital and expense. And this means we will not launch vehicles at a loss that are not good for our business, knowing what we know now about the reality of the market equation. And we clearly see China and Tesla as the cost benchmark. We also see excess capacity that will lead to more pricing pressures, which is in our business plan, more consolidation, and many, many more partnerships. We see less vertical integration in some areas to relieve capital, and we see a lot of tough choices on footprint. Early majority customers are really different than the early adopters, particularly in retail, and we see a lot more openness to hybrids and extended range electric vehicles we call EREVs. We also see a divergence on electrification adoption between commercial and retail. Commercial customers focus on total cost of ownership. They use the vehicles much more intensely, and they do not overbuy batteries that retail customers do. They're also investing in our pro charging depots and our integrated software because they want to be smart about the cost of charging their vehicles. And I'm happy to say that our EV Pro contribution margin for our EV vans is now already positive. We also have learned a lot about the size of the vehicle. We believe smaller, more affordable vehicles are the way to go for EV in volume. Why? Because the math is completely different than ICE. In ICE, the business we've been in for 120 years, the bigger the vehicle, the higher the margin. But it's exactly the opposite for EVs. The larger the vehicle, the bigger the battery, the more pressure on margin because customers will not pay a premium for those larger batteries. And lastly, compliance. There is a lot of pressure on compliance. And the lower demand for EVs, especially the pricing, means that CO2 credits are now likely going to be needed for fleet flexibility and optionality and will be a critical strategy choice for any company. Well, what are the success criteria for EVs in the future? Well, the first one is to have the right mix of fully and partially electric solutions. This is imperative. You have to have a compelling product roadmap, and you have to have very flexible manufacturing. A good example is our hybrid business. The global hybrid portfolio at Ford is on track to grow 40% this year across 9 nameplates. And we really bet on hybrid trucks. In the first half of the year, our hybrid pickups, Maverick and F-150, grew more than 3 times the rate of the overall hybrid segment. Our F-150 hybrid with Pro Power on board is a game changer for our customers. Commercial customers have power on the run, like job sites, and our retail customers have emergency power backup. And boy, have we seen that in Texas and all the other extreme weather events, how important that is for our customers. The second success factor is matching the cost of the Chinese OEMs and Tesla, especially on affordable EVs. Now, when people hear about affordability and they think about small and unaffordable, I'd like to address that now. We are designing a super efficient platform, leveraging innovation across our product development, supply chain, and manufacturing teams. With no engine or drivetrain, a smaller vehicle can have a much roomier package, actually the interior package of a class above, with a small silhouette. That's a big advantage for customers versus ICE. And we're focusing on very differentiated vehicles priced under $40,000 or even $30,000. And we're going to focus on 2 segments, work and adventure. And why does this matter? Well, the use case for smaller vehicles, affordable vehicles, means shorter trips, more urban locations. It fits the duty cycle of an EV. And affordability, well, smaller batteries have an outsized impact on the cost and margin of the vehicle. And the consumer tax credit in the U.S. become a much larger part of the sticker price of the vehicle. And that is supercharging the lower cost of ownership that EVs have already without it. And finally, we have the ability to leverage this platform across many top hats, which will drive scale and large install base for our growing software business. And the last success criteria is to be really careful about your larger EVs. For us, they'll be part of the picture, but success requires even more breakthrough on a cost efficiency, much smarter choices on segments, in our case, work and commercial, a lot of partnerships, and a lot of technology pathways. Overall, the EV journey has been humbling, but it has forced us to get even more fit as a company, including applying it to our ICE business, and that will pay off in the long run. I am so happy we scaled 2.5 years ago, and we have the option to incorporate those learnings into our next generation of EVs launching in the coming years.
All right, a lot to unpack there. I do think he is right that at least half of Ford customers would be better served buying an EV. I think that's a no-brainer as long as they can afford them. Right now, EVs are pretty expensive. Anything over $40,000 for a car is unattainable for a lot of people. Anything over $30,000 is unattainable for a lot of people. But I do think he's right. It would be you'd be better off owning an EV because it's less maintenance, and if you have the ability to charge at your home or at your apartment or at your business, then that's going to be much cheaper versus paying for gas every day. But the reality is the internal combustion engine side of Ford is subsidizing the EV side right now, because Model E, Ford's EV business, is not making any money. He mentioned in there that commercial EV customers are not overbuying on the batteries like retail customers do. Commercial EV customers likely know which routes these vehicles are going to be driving, and they buy a battery pack that fits their business needs. Versus you or I, we might decide, oh, well, we're not going to go with the biggest battery pack, but we'll go with the medium because we want to make sure we have that little bit extra. I guess that's not really going on with fleet sales. We're going to talk a little bit more about China and Ford in the next clip, so I'm going to skip that. He talks about eRev, and it looks like eRev is a portable generator to charge the EV. I don't know if that's going to be built into the vehicle. It said removable when I looked up on this. I did a Google search for this. But yeah, that's kind of what it looks like, is just a portable generator to charge your car if you need one. Let's see. I was a little bit surprised that there are more margins in smaller EVs than the bigger EVs, but that does make sense. Big EVs, big batteries, and that really does cut into the margin. We talked the last episode about the lowered cost of EV batteries, but we're still not at nothing. It's still pretty expensive. It looks like there's a new smaller platform in development for Ford for vehicles, and we're gonna talk a little bit more about that. There's a clip later on that they don't really announce anything, but they do talk a little bit more about it. Software services, I cut this part out, but they expect there to be $1 billion in revenue just from software services in 2025. And they mentioned that their vehicles would continue generating revenue even after the purchase, which again leads right back to software and services. All right, next we are going to hear a question from Adam Jonas, and it's going to be about low-cost EVs and whether or not China will be involved.
Just to follow up on Skunkworks, your team's made a number of visits to China over the last couple of years, including, I think, just a couple of months back, I believe you were there. What are you learning from these trips? And specifically, I mean, you mentioned China along with Tesla, the cost benchmark, but do you think Ford can bring to market a low-cost EV profitably without help from your partners in China? Or is China part of the solution? And if China is part of the solution, then what are you going to do about it?
Yeah, great question, and an important question for any OEM as the EV market evolves here. Look, we made the bet on CATL many years ago. It was a very important bet for our company to localize LFP cells in North America, happened to be in Michigan. We're 2 years into that project. That is a signature partnership. CATL is the largest battery maker in the world, and they lead iron phosphate cost and reliability. That is a signature partnership that we launched many years ago that we've been working hard on, and Marshall's on track. Look what Volkswagen is doing with XPeng and many others who are kind of taking a Chinese low-cost platform and using that. That's not our strategy. Our partnership strategy will be on the component side, going deep into the supply chain for IP that is critical and unique. I'm not going to get into specifics, but CATL is one example, and we're going to learn how to do that at the company. We believe that this is essential know-how for the company because the true fitness test for EV profitability will be on these small vehicles. And we have learned from our experience with Mazda and Kia and many others that we have to have this know-how in the company because it applies across all of our vehicles, not just EVs. And the lowest cost is the most important capability. We believe that many of our competitors will turn to their Chinese either independent companies or partners to basically use their platform globally. We learned a lot, not just from China, but from MEB. We've been scaling MEB. We know the cost of Volkswagen. They're one of the leaders in scale. And what we found in that trip and subsequent trips to China is that we have a very competitive battery with CATL. but many of the Chinese players in the lower cost have very affordable batteries, but they don't have the most efficient design outside of the battery on the other EV components. And our team, the Skunk Works team, we might as well call it a big team now because it's no longer Skunk Works. We're betting on them as our affordable platform. They have really designed breakthrough EV components with our own design that we think are better and cheaper. And we have a very competitive battery localized with the IRA benefit. And the partnership discussion, we think will largely play out in larger vehicles. We think that's where the big partnership opportunity really lies. In the commercial vehicles that I talked about, we have nothing to say right now, but why is a partnership so important? Because the bigger vehicles have this kind of inverted cost, and the partners allow you to be more capital efficient and have better returns. And that's why we think that the partnerships on larger vehicles will play out as vibrantly as affordable vehicles.
All right. He talks a little bit about Western OEMs. I don't even know if he's speaking specifically to North American automakers, but he talks a little bit about automakers partnering with Chinese companies, and that's not going to be the right decision for Ford. And you know what? I think he's speculating here. Maybe some of these companies will partner with Chinese EVs, and maybe some of them won't. China's kind of a hot button issue right now. I don't know that a Western automaker would want to go down that road of spending money and time partnering with something only to find out that one of the pieces of technology is no longer allowed where they make the most amount of business. Like, I'm not saying this is going to happen. I'm saying this has got to be at least a thought in the process when they're deciding these things. But there are plenty of EV partnerships. Jim Farley actually talks about their partnerships with Volkswagen, who is, Volkswagen has the MEB platform, and Ford, was developing something on the MEB platform. I don't know if they still are or if they've abandoned that to do their own thing. But plenty of these companies are partnering. GM and Honda are partnering. Let's see here. Toyota and Subaru are partnering. So there are examples of companies partnering and sharing their EV technology. Tesla is, at least Elon says they are, happy to partner with these OEMs on a lot of different things. Whether or not they will, who knows? Lucid Motors has announced, several times, not announced, but, Peter Rawlinson's said several times that they're open with partnering with other EV manufacturers. I think where the problem lies is all of these EVs that I just talked about in these partnerships, those EVs cost a lot of money, whereas Chinese EVs, as we talked about last week with the Galaxy E5 SUV from Geely, they don't. They're pretty cheap. They're not too expensive. That's a really long way for me to say that I don't think that what Jim says here is 100% true. I also don't think it's 100% false. Like, there's a mushy middle in where the truth lies. And all of these companies, whether it's Ford or GM or Tesla or, Stellantis, they're all going to do what's right for them and get them to, profitability the fastest. And if that means they're going to partner with a Chinese OEM on some technology, then that actually makes sense. Like, Chinese automakers are making really good cars. Why wouldn't you, other than the geopolitical mess that we're currently in? Let's go ahead and move on to our next clip, which is honestly similar to the last clip we listened to.
When we step back, and I think this touches on Adam's skunkwork questions, but when you compare Ford now to history, earnings are now significantly higher. But the capital base has expanded such that returns really haven't improved. And this isn't just Ford, this is most Western automakers. The earnings part of the equation is only partly in your control, but the structural costs are. So how are you thinking about the trajectory of structural costs from here? Even simply, are they going up or down? And B, given this is a similar dynamic for a lot of automakers, and so many traditional automakers are investing billions in R&D, really trying to achieve the same thing with respect to EVs, make an affordable EV at scale to compete with Tesla and Chinese OEMs. Why do you think the legacy OEMs are all doing this by themselves? And why aren't there more partnerships? Thanks.
Well, I would say that you have to think about how you're going to fundamentally change the development process. I think that's the core thing. It's not necessarily just doing it with somebody else. Sure, we're looking to be as capital efficient as possible, bring partnerships in for capital, but you can do that on components, so you can do that in other ways as well. And we know, and we've done a lot of work understanding what has kept this industry kind of in that penalty box that Adam was talking about, as you mentioned. We're not capital efficient, we're lower margin, we don't grow enough, and, we're not resilient. It's a very cyclical business, and we're working to change that. We've walked through the areas that we're doing and attacking to, improve those key areas. But it's really about the efficiency of the design, and the Skunkworks team is doing something very different. That team is, unique for a traditional OEM, the talent on that team. They're doing an agile waterfall systems integrated design process, which no other global OEM has done, traditional OEM. And we're really working that to be focused on what can happen from a tech standpoint as well. And that vertical integration really helps us drive to those lowest costs. And we're finding that there's ways to be more efficient in many ways than some of the Chinese by incorporating the technology that the team's able to bring forward and leveraging the know-how that they've had from the last products that they've put forward. So I think there's a lot of opportunity for us with that team and the talent and the change in the process that's not only going to show up when we get to our affordable EVs that are going to come from them, but it's also important to understand that if you don't have that transfer function Jim talked about, the entire company isn't going to improve. And by doing it within the company with that team, we have a much higher probability of that transfer function being successful.
Yes. And I would just emphasize that the ambition at Ford for partnering on EVs is record level high. We're not going to make any announcements in earning call, but this is absolutely a flip the script moment for our company. We have done partnerships like Volkswagen. We have learned how to be successful with the one-ton Transit that includes an electric vehicle. We really see that opportunity in front of us, but we are not going to partner to the level where we delegate our future and the future fitness for cost competitiveness outside the company. And if we have a partner, we have to have that transfer function that John mentioned. I would only say that we need as an industry to start focusing equally on the one-time cost investment in the electrical architectures and the transition to digital products. Now, the integrated services that we're finding, we have 765,000 paid subscriptions. They are different than our competitors who just basically do it for infotainment. We are basically, productivity on Pro as well as Blue Cruise. And to take that to the next level, make that business supercharged, we need to invest heavily in electrical architectures, not just on our EVs, but also in our ICE vehicles and hybrid vehicles. And that will be a one-time investment. And the benefit of that was what I was trying to highlight in my script, which is, when the economy turns down, we still have those subscriptions. Our service business, customers turn to that even more in a downturn because they keep their vehicles longer. They have to do more maintenance. These are ways to kind of de-risk our exposure to economic cycles. And we have to make OTA, the updated IVI system, the integrated services team, both B2C and B2B, our electrical architectures. These are all basic enablers that go beyond EVs. And the industry is going through that transformation too. And I believe Ford is in advance of others because we have more complicated platforms than Rivian and Tesla and many of the other OEMs. And because of that, we also have more scale. We have more complexity, but we have more scale. And I think that transition and kind of structural change in the industry is as big as the EV change. We're going to get to $1 billion of revenue, we think, next year on software. I wouldn't have thought of that 2-3 years ago.
I don't know that I have much to add on this that I haven't already said, but I do appreciate where Ford's head is at when it comes to EVs. Like, honestly, the transparency of telling us what they're thinking, because I found this earnings call to be extraordinarily thoughtful on Ford's behalf. And, we're just finding out little nuggets here and there that, we'll be able to use later on as we try to parse what announcements come in the future. But services are going to be a big deal for Ford, and a smaller EV, and I'm looking forward to seeing that smaller EV. And Jim said that, and we're on first name basis now. Jim Farley said that maybe even under $30,000. I think that's the exact right number. We have plenty of cars that cost a lot of money, or plenty of EVs. We need EVs that are more affordable. All right, let's go ahead and move on to our final clip, which has to do with Ford's electrification strategy in regards to the presidential election. So let's listen to that.
Jim, I'm wondering if you could just address the electrification strategy in light of the November presidential elections. We know obviously there's one candidate who's talked about pulling back on the EV mandate, and there could be some implications on IRA or the federal or California mandates. I appreciate you've talked about the need to have flexibility. And I think you even referenced earlier on the call, that credits will play a role. But maybe you could give us a sense of, where the strategy is. Is your strategy one that's more existential that, and clearly with Skunk Works, it seems to indicate that it is, versus a strategy that is maybe one that's just more meant to reach compliance with a longer term goal in mind? But maybe you can give a sense of how the strategy might change, if at all, depending on the outcome of the election.
Yeah, thank you. Obviously, Ford's had a lot of history, a lot of experience and wisdom after 120 years of elections. And I would say, think about our strategy this way. We believe that the fitness of the Chinese in EVs will eventually wash over our entire industry in all regions. And so we believe as a company, even if there were short-term adjustments we can make to a compliance-led, lower requirement lineup, we're not going to approach it that way. We really believe what I said, which is that many Americans would find an electric vehicle lowering their costs. Not everyone, but a high percent. And we believe that to be fully fit globally, whether it's our Ranger business, our commercial business, anything really, we have to find a way inside the company to be fully fit with lots of partnerships on the supply chain side. And so this is a kind of enduring strategy at the company. It is not a strategy where we handicap the presidential election for the next one and the next one and see what we can get away with the EPA. That is not how we run Ford, because Ford didn't go bankrupt. We have been enduring. And the only way we believe to be enduring is to make money on small EVs and commercial. And that's our bet. You'll see it play out in the coming years. It's a big adjustment from our Gen 1 products. I'm glad, as I said, we scaled 2.5 years ago because we could learn about the reality of the market equation, which is just requiring us to be more fit and move faster. The EPA could certainly change, but it would take, as John said, several years through legislation and lawsuits for that to change. So even from a compliance standpoint, we can't really count on administrations changing this way or that way. I've been to the Hill many times in the last month, talking to many Republican leaders of the country. And I always say the same thing to them. Please realize that there's a subset of customers that absolutely would save money. And there are also absolutely a group of customers who like partial electrification. And Ford's strategy is choice, manufacturing flexibility and choice. We are not going to bet student body left on this or right. We are going to give customers choice. We're going to be flexible in manufacturing. That's why we want to be a first adopter to an EREV or whatever's next on partial electrification, because we want to be first and best at the choice. But on EVs, we need to be fully competitive with BYD, Geely, even our own partner Chang'an. And the only way for us to have done that is through this small group in California.
All right. I don't know who he's referring to with the small group in California. I think it might be the Skunk Works that they have, because I do know that they've had for some time a Skunk Works in California, but I don't know what exactly that references into, Jim Farley said that the right choice for Ford was making a small, affordable EV and a commercial EV. And then, to fill in the gaps is to manufacture hybrids, ICE cars, basically what customers are looking for, which is what GM said on their earnings call as well. And in terms of, changing your business based on which president is going to be in office, I would imagine that back in the day, this was not as big of a concern that automakers have had to deal with. Ford's been around for a really long time. I even think he mentioned that they've been around for a lot of presidential elections since the time that Henry Ford started the company. I think you need to be aware of what an incoming president may or may not do, but I don't think you need to, completely change course on whatever plan you have. If the IRA credits go away, that's not the end of the world, especially if you have a more affordable EV coming. If for whatever reason one of the administration makes it more difficult to buy an EV, and I'm not picking on anybody, I'm just using a hypothetical example here, then that becomes problematic. But I don't think that's going to happen. No matter which president gets in, I don't think it's going to be more difficult to buy an EV. I think the emphasis on renewable energy will change one way or the other. All right. I think I've tiptoed that line well enough. Let's go ahead and call this our show for this week. I want to thank everybody for listening to the podcast. It really means a lot. I would like to ask you a favor. Instead of giving you a Patreon plug, I need to, if you don't mind, to promote the show. We in the summertime we had a little bit of a dip, and we always have a dip in the summer, and it comes back. But this dip was a little bigger than normal. Right before the summer, we had a lot of new people listening to this show, and then we hit that summer dip, and it just kept going. So if you can find it in your heart to recommend the show to somebody who you think might like it, I would really appreciate that. You don't have to do social media stuff or anything like that. Just if you know somebody and you want to recommend the show, please do. All right, everybody, I will talk to you on Tuesday.
This concludes the Ford Motor Company second quarter 2024 earnings conference call. Thank you for your participation. You may now disconnect.